Yo, 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 morning peoples. We are back with another one. And yesterday we done a video on the daily lines template, how we can use those to, just keep our focus restricted to one or two sort of areas. Um, and we also looked at how we can mark out the most recent daily highs and lows, which could also help us. Um, but today we're going to be looking at the weekly zones now, because obviously the weekly is just as important. As you can see, gold respected this, looking at the left side of the screen, gold respected this daily high from 4 days ago. Yeah, we came above, boom, came above, back beneath, came above, back beneath. And this time, we have respected that area. So we breached above it once, twice, three times. And then after we came back beneath, we had a big wick rejection on the 90-minute. Big wick rejection through this daily zone and through the time session of London. So that's a London high that coincides with this candlestick from 4 days ago, which is great. Just adds more confluence. This little upwards push is straight manipulation. Obviously, new people were selling here, selling, selling, selling. Probably taking out these sellers first. And then it's decided to move the market where it originally wanted to go. But yeah, so I've jumped into it a bit quickly. Before I carry on with the rest of the video, if you could like, comment, and subscribe, that would be lovely. It gives me some more confidence to keep making these videos. Even though I'm not rich yet, lads, the skill is here. The skill is here. It's being put on the table. I understand I ain't, making money yet, but that's because I've made it that way. It's not because I can't, if that makes sense. Like I've really focused on this sort of um aspect of trading, like the chart work. And I've really focused on like sorting my own mind out as well, because as you know, yourself is your biggest enemy. And you don't even realize, some of you won't even realize that you have so many issues wrong with you. And it will always hold you back. But until you just step back a little bit, take a look at yourself, and yeah, you've got to be really honest and truthful about what you want and who you want to be. And trading, you cannot lie or be a liar, or you cannot be fake. It doesn't work. You get caught out, and not only that, but karma will literally repay you in ways that you will just you won't like. So there's no point. There's really no point. But yeah, guys, let's get on with the video. Weekly sessions. Gold is absolutely melting. We're probably going to come back down to this. Sorry, I have a low marked on here at 2025. Um, so I kind of just want to see how this is going to behave. I'm just going to be watching gold. I won't be trading anything. Just watching for the moment. Yeah. All right, cool. So gold is doing its thing. Now I want to show you um, the weekly zones, but I don't know what pair to do it on. That was pretty perfect. I mean, we didn't quite come down to here to create that new low, which would have been lovely. But look, this has come down, this has broken it. So what you'll probably see is we come down here, continue making that new low, and then during the night, going into tomorrow, we're probably going to be on a retracement. Or this shit is going to just sink for the rest of the week. But we need a closure out of coming along to this right side. We need a closure on this daily time frame. We need a closure beneath that green zone. And yeah, that was quite nice though. Pulled into this box lovely. Reacted from it, came out, came back, retest, boom, came away, came away. We'll definitely be seeing this green line get touched. And even potentially, guys, this to happen, price to come into here. So that would be very nice. Very nice, you know what I'm saying? I'm saying. Whoa. Well, I should just close all these now. Oh, no, 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 I shouldn't. Oh, finally, okay. All right. So we're going to do it on this. I'm going to have to leave these trades because these are going to turn positive soon. So let's go one screen to make it not so confusing. By the way, just off the back, can you see how like sort of messy and crazy that all is? Or if you just zoom in and you just pay attention to the last couple weeks, that's it. Minor. What do? All the block. 50% of that bitch. Yeah. 50% your market. Okay. Delete the Fibonacci. Bosh. We now have one line to wait. And what have we seen? Boom. So this is confirming we are going to be moving to the downside. Bit of late entries. We will not be entering from this candle like I probably would have done 2 weeks ago. Idiot. But no, man, it's all good. I thought this was the move. But little old Daniel, too fucking eager beaver, premature market executions, and that look ends up in minus because of dickhead. All right, cool. Let's just get on to the weekly. Weekly. So the daily, I told you, you find areas where prices just woof, just moved from very heavily. Like here. It's good areas, where volume is. Weekly is not so much the same. It's not so much the same. Word. And what I mean by that is, first of all, why is that there? Okay. What I mean by this, lads, what I mean, lads and ladies. So I used a horizontal line, not the ray. You've got line and the ray. Ray, ping it to the body. The line will go all the way, like so. But with the weeklies, obviously you're on the weekly time frame, duh. and then you mark out whatever recent highs are valid. So most recent one being this. Sorry, we're going to do this one simply because, right, this doji here is trapped volume, right? So if we box that off, not box it off, but we mark the high and the low of this one candle, we are now in a whole week range of trapped volume where price is unable to get out of either this zone or this zone. Quite simple. And so what this enables us to do, how many pips is this? 150 pips. So it's not even a big zone, to be honest. Usually weeklies are like 250 pips, 500 pips apart. So for example, you could do it like this. You could have this on the bottom one like that. You could have that up there like that. And then it becomes a thing of, okay, cool. Price has come down, retested, broken down, boom, 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 changing direction. Yeah, we've hit a floor. Obviously, it's reacting to this sort of area to 100. And then, which by the way is off the tip of this wick, so that's kind of cool. But yeah, so it's obviously it's come down, it's played about, hit the floor, it's not managed to go any lower than 1.2100. And then after rounding off, big momentum candlestick that takes out all of this choppy behavior, confirming upwards direction. After we have this candlestick, we have a pullback as always, and then a follow through. But look, we bump our heads. And then what happens? Price breaks through cleanly. Yeah. After breaking through, we get one more candlestick and then a pullback to the area. Then after a pullback, we get another rally straight up here, creating new highs at a high level 1.28 hundreds. And yeah, so now it's a thing of you have two key levels, 1.28 hundred, 1.25 hundred. That's around 300 pips. Gosh, 320 pips. Lovely. Lovely. So now it's quite simple. Because you marked out your weekly parameters, yeah? You marked out your weekly parameters. So now you know, right? Now you know sort of what areas to pay attention to. But really and truly, we don't need that just yet. We don't need this either. But what we can do is zoom in right now. And look, this is where we are from there to there. Right, so that's the first stage of the weekly time frame. I might have spoken a lot, but summarizing everything up is very simple. All you have to do is find a region of price that you're interested in. Probably it should be the most recent areas as always. And you want to just mark out a nice high area where price failed to break. In that instance, it would be all these wicks. The reason I marked this one on is to prevent manipulation and shit. Because if I marked it here at the top of this candle, look how many wicks go through it. Boom, 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 boom. Just shit. But if I mark this one on and I come on to the smaller time frames, and it's very evident that Yeah, look, see all of these, all of this on the left side. This is the wicks on the right hand side. And then this here is the last bit of manipulation before price started melting. So imagine you got cells from here. You're thinking, oh, cool. Price moving away, moving away. You're thinking, yes. All of a sudden, Bosch comes all the way up here, takes out the money from these sellers and previous sellers, wherever. Liquidity taken out, boom. Creates new lows, pull back, new lows, pull back, new lows. And now hopefully, after filling in a daily fair value gap and a daily 70% Fibonacci, with new lows being created on the daily time frame as well. So complete bearish structure. This, guys, this should be coming down to this black line again, 1.2500. Gonna mark it out. I'm changing this. 1.2500. Why did that not let me do that? Why did these charts? You know what? No, I don't even want to do it. Just how about you move? Why are you not moving? Take profit. Modify. What is this shit doing? Why the hell did it go back on gold? Oh, finally. Finally, mate. So yeah, this is where I feel like GBP USD is gonna come down to eventually. Mm, and yeah, so the weekly is kind of simple, man. You find a nice 300 to 500 pip range. Find two nice levels. I've got 1.2800, 1.2500. Very whole, very key, very psychological. Um, and yeah, you just find yourself a range, bottom, top. The second way to do weekly time frames is to mark out the individual previous week highs and lows. So, for example, this one. Oh shit, not the right one at all. Sorry, lads. So this one, there's the low of that, and you can mark on that and the low of that. Sorry, just want to mark on one more thing. Bosh, the high of. So right now we've just marked on the high of yesterday. No, sorry, last week, the previous week, and the high of 3 weeks ago. So we have now marked on 3 weeks worth of highs. That was previous week, 2 weeks ago, 3 weeks ago. And then this candlestick right now is on current week. And what this helps us do is it helps us track and trace the most recent price action. So now, as we can see with price, which is right here, we are currently underneath the high of 3 weeks ago, which made this huge ass candlestick. We are beneath this high. This is now a resistance. Yeah. The same way this area here was a resistance, got wicked, rejected, and then it came below, came below, came below. Could have reacted here and started coming up, but it didn't. It broke past it. I'll show you on the smaller time frames. So the 3 weeks ago high, that is the one I'm gonna mark on. And that is there. You got the high of 3 weeks ago there. And then the one that's most valid because price didn't quite come up to the top of this. We didn't come up here again. We didn't. I thought we would have broken past it and then melted. But it looks like we have a 3-pin sort of pattern forming where price is rolling to the downside. But as you can see, very simple. Yeah. You can do simple stuff like that. Broken out of this whole fucking consolidation shit. Completely broke out. Now you know for a fact. We may even get, so you know how I said I was kind of not expecting, but wanted to see if it came up here to take out liquidity, but it didn't. Rejected, rejected. It was just too easy. And then it actually sunk off. So now I think it's got a load of sellers involved. It wouldn't surprise me if we came back, touched our heads just above it, and then started making even more sell signals going downwards. With that being said, we have a US low, US and London lows all here. So this whole region, we get price to come into here and start coming back up would be decent. And that's all it helps. I've marked on 2 lines. Yeah. I'm all lagging out. The 3 weeks go high and the 2 weeks go high. Well, right there. You can see how prices come up above it, come beneath, come above, reacted, come above, back beneath. One last time, back above, back beneath, reaction, melt. So this top one here, this one is important because that's where the reaction has come from. And now we have melted. So the next target for this price is 2570, 2580, whatever it is. But it's the bottom end of that. Price to come down here. But as you guys know, it's not like that on the smaller time frames. There will be pullbacks and noise and shit making it much longer. But yeah, that's the weekly time frame session wrapped up. You just mark on the previous couple weeks highs and lows, bosh, or you give yourself a nice 300 to 500 pip range where you mark out whole region. Now I have practice with both of these methods, and recently, throughout last year, like the summer and that, when I was doing my videos, I ended up adopting the strategy of marking out the most previous sessions, the most previous candlesticks. So this is what I would have done. Would have seen this, boom, took a short. Take profits would be somewhere down here. But yeah, it's very simple. Get used to doing it. Most recent highs and lows on the weekly time frame using the wicks, not the bodies, the wicks. And then if you don't want to do it like that, find yourself a nice whole region to play within. And that is it, guys. I hope you liked it. I hope this video was somewhat informative. And yeah, I'll see you in the last video. Well, it's the last one. Yeah, the next one will be the last one, guys. So like, comment, subscribe, and I'll see you in the next live. Peace out, my peoples.